So this is part 2, okay, and I'm looking up here to working 4, okay. So what I would advise you to do, okay, if you just bear with me while I get this up and running, um, I would advise you to draw a line in between these paragraphs, because if you can see here, there's a paragraph here and just underneath it another paragraph. I would get you to draw a line across that if you have a physical exam, okay? And the reason I state that is because the first item, it's very, very easy to do the double entries for what happened in that paragraph, and then once we've done those double entries, we can do the double entries for the second paragraph. If you try to complete the whole question together, you will probably not get, because there's about 8 entries, all right, you probably won't get the double entries married up to make them balance, okay? So again, split this one in half, and it says during 2020. So during 2020 basically means that if stock, right, if we think about the stock in this case, so the date of opening stock and closing stock. So opening stock is dated the 1st of the 1st, okay? Closing stock is dated the 31st of the 12th, okay? If it says during the year, it's in between that time period. So when we're talking about stock or goods that we've used, it has to come from purchases, okay? Now, I said that once, and I guarantee about 80% of students are going to forget it. If it says during the year, okay, in comparison to up here where it says in stock at the 31st to the 12th, so it tells me the stock on that date, so that's why the figure came from closing stock. If it says during the year, instead of taking it from closing stock, you have the figure for stock has to come from purchases, because if you think about it, what am I purchasing? Only raw materials or additional stock that I'm going to sell, okay? So when you see during the year, you have to automatically think purchases, okay? So just bear that in mind. So during 2020, a storeroom which cost €75,000 was destroyed, as well as stock. So the stock figure there is coming from purchases because it's during the year, and the land and buildings there, if it's a showroom, it's coming from land and buildings. So because it was damaged, I need to take them out of both accounts. So if you bear with me, let me get the trial balance figure there for land and buildings. The trial balance figure for land and buildings is going to be €900,000, okay? And that's on the debit side because it's an asset, all right? Now, the damage that was done to the land and buildings was €75,000, so I'm reducing my land and buildings by €75,000. Why? Because it is damaged and it is no longer an asset, okay? And that will leave me with €825,000, okay? So just to clarify, that will be my fixed asset in the balance sheet over here on the right hand side, and that will be 825. Now, there are going to be a couple of workings on these, so I will be scribbling that figure out, but I just want to show you the logic behind it. I know this is my new land and buildings figure. I know I have to think about where it goes. This is where it goes, so I'm learning the layout of the balance sheet as I do this every single time. Okay, the purchases figure then. Now, as you can see, instead of taking the trial balance, because I already have working on purchases coming from up here, I'm going to scribble that figure out because that figure is now invalid, and I'm going to bring down the new figure of 104,900. And what I'm going to do is I'm going to take out the damaged amount. So in the question, the damaged amount, as far as I'm aware, was €24,000. So if it was damaged, I no longer have that stock, so it needs to come out. So 104,900 is my expense. I'm reducing my expense €24,000, and that leaves me with a new figure to the value of 102,500. That's my new trading stock amount, and it's 102,500. So again, I know that where this figure has to go goes to the trading account at the minute. Okay, now if I go back to the question, it specifically tells me here that so both those were destroyed. So as you can see, I've got 75 and 24 on the credit. That equals 99. Now they're telling me in the first half, so above the red line there, it says the insurance company has agreed. To contribute €90,000. So they're going to owe me 90,000. So because I'm owed 90,000 from the insurance company, that needs to go into the accounts. All right, they're an insurance company, they're going to pay me the money, so I'm going to treat it as an asset. So if I'm owed money, very similar to if I was owed money from a debtor, I would simply put that into the current asset section of the balance sheet, like I'm going to do here. Okay, now that's actually everything that happened above the line. Okay, so again, I'm just focusing on above the line now for the time being. So everything above the line is entered incorrectly. Now, if you think about it, we need to make my accounts balance. 75 and 24 is going to be 99. So there was €99,000 worth of damage done, and I've taken that out of my 2 appropriate accounts, and I'm going to receive €90,000. Okay. Any business students here will know that you cannot make a profit from insurance. So in this case, they must have underinsured the value of the buildings or the value of the stock, because there's €9,000 missing. So if I lost €99,000 worth of stock and buildings, and I'm only receiving €90,000, I have to record the missing 9,000, and the 9,000 has to go on the debit, or if you don't like the T accounts, just know that that €9,000 is a loss on the fire or stock in this case, and I'm going to treat it as an expense, selling and distribution expense, because it's got to do with stock, and stock I sell. Okay, €9,000. All right, and now if we think about it, 75 and 24 is 99, 90 and 19 and 9 is 99, so 99 on the debit, 99 on the credit, and we're ready to go for the second item underneath that red line. So after that, it then tells us that a new store was built by the business own employees. The cost of the labour was €44,000, so that needs a double entry, and the materials cost €38,000. So again, because this is during the year, if I take materials out of the business, it's coming from purchases. Okay, remember, if I'm making a table, okay, and I'm technically supposed to pay my employees to make the table, if they're not making a table and instead they're actually building up the business, well then that can't be treated as a business expense, because it's nothing got to do with making tables. Okay, so the accounts that I've opened here are, I'll flip the page, I've reopened my land and buildings. Now, you can leave this open, but I just like to do it just to make sure that we're happy where everything is coming from. So my land and buildings one here, I'm going to scribble that out, 825, and I'm going to reopen it down here. Okay, so coming from the same working for, and it was for, sorry, what's the figure? It was for 825. So 825000. 825000. Sorry, that's not in this camera. Okay, so because the building has been rebuilt, all right, and again I got purchases here, because the building is being rebuilt, €44,000 has come from labour. Okay, so labour, the only item in the trial balance that labour could be considered an expense would be salaries and general expenses, which would be here. So 135,800. So because the labour is coming out of this amount, I'm going to open salaries and general expenses, and I'm going to get the trial balance figure there to be 135,800. 135,800, like so. 135,800. Now, if we think about it, the 44,000 was taken for the labor. Okay, so that amount was used because I'm using it to rebuild the building. It's going to add to my asset. Okay, so the €44,000 has to go on the debit side of my land and buildings, because I'm increasing the value of my asset, and anything that adds to the value of our asset is obviously going to increase its value in the accounts. Okay, so that 44,000 needs a double entry. Where is it coming from? It has to come from my salaries and general expenses. Why? Because I'm rebuilding a building. This building has got nothing to do with making tables, which is what a business expense is supposed to be. So if it's not got to do with that, it can't be treated with the rest of my salaries, which is in order to make tables. Okay, so that's why it comes out of there and it goes into there. Similarly with purchases, okay, so if we look here, the cost of the materials, so because it says during the year, the cost of the materials, the 38,000, has to come from purchases. Okay, so the 38,000 is adding to the value of my building, okay, like so on the debit side, because it's increasing the value of my asset. Where is it coming from? It has to come out of purchases, because I no longer have that materials anymore. The current purchases figure is 1025000. So over here, 1025000. So what I'm doing here is I'm simply taking out the €38,000. So 38,000 is coming out of the materials, because I did not use this material to make tables. Remember, my sole goal as a business is to make the tables. Okay, if the materials weren't used to make the tables, it cannot be treated as a business expense. So it gets taken out of purchases of €38,000, and it simply gets added into my land and buildings. All right, I kind of hope that makes sense. So if I look up here, my new value of my land and buildings is 907,000, and that's my new fixed assets over here, FA 907,000. My new purchases figure should be 987. Okay, so 987,000. That's going to go to the trading account over here. Okay, 987,000. My new figure for salaries and general expenses is going to be 91,800. 91,800. That's going to go as an administration expense. Okay, 91,800, and that's me done with that working. Okay, so again, I broke it down into the two manageable steps. This is what I did for the first part above the red line. This is what I did for the second part below the red line. The next item is working number 5, and we're going to look at the buildings revaluation. So V, we revalued the buildings, okay, rate of depreciation is 2%, and we revalued to 1.1 million. Always keep an eye on the date, the 31st to the 12th, 2020. So the buildings, and again, the good thing about this is, I don't need to go to the trial balance because I have a figure for buildings and it's 907. It's this 907 that is being revalued. So the 907 is what it is worth at the minute prior to the revaluation. Okay, it's being revalued to 1.1 million. So how do I go from 907 to 1.1 million? I simply add 193,000 euros. So 193,000 is being added to the debit side of my buildings, and the double entry is it's going to go down into the revaluation reserve. Or if you don't know, like T counts, it's just this amount has to go into the revaluation reserve, 193,000. So the buildings, the new amount in this case, and finally I can finally close it off. This is my new fixed asset, 1,100,000 euros. Okay. Now, an important thing to note is when I revalue an asset, the date of the revaluation is so important, the 31st to the 12th, because on that date, my total accumulated depreciation has to go to 0. Okay, so just bear that in mind. Now, when I'm depreciating for this year, 2020, because the revaluation occurred in the end of the year, I have depreciation on this 907. I was asked a question by a student there during the week, but how do I know it's 907? Because they didn't give me a date that I rebuilt the building on, I have to take it at what it was, the price of it before the 31st to the 12th. Okay, so that's why it's on the 907. So the 907 multiplied by 2% in this case is going to give me, so the 907, sorry, no. The 907, I'm going to highlight this in advance. 907 refers to the price of the land and the buildings. So I cannot depreciate land, all right? So bear that in mind. So in the question, it specifically states here that the land cost was 400,000 euros. So they're giving me that specifically because it cannot depreciate. So 907 is the value that I take, and I simply reduce the 400,000 euros of land, and that leaves me with 507,000. That is the value that can depreciate. Okay, so if I get 507,000 and I multiply it by 2%, I should come out with a figure to the value of 10,140. That is on the debit side of that T count, 10,140, and that's simply an administration expense, AE. All right, 10,0140. That figure needs a double entry. So similarly to the vehicles, this year's depreciation has to be added to last year's and any pre-existing year's depreciation. All right, so I've got a TB here, and again, it's going to be the difference between the cost minus depreciation is equal to the net book value. Okay, so I know this coming from the question, and I know this coming from the question, the trial balance. So if I get the difference between the cost was 900,000 euros. The net book value, let me just check it there. The net book value is 795. So my opening accumulated depreciation has to be 105,000 euros. So 105,000, 105,000. And I'm simply adding on this year's charge, which I think was 10,140 euro from the previous page. And if I add those together, I should come out with a figure to the value of 115,140, 115,140. Now, remember I said about accumulated depreciation. The day I revalue the asset, all accumulated depreciation has to go to 0. So that was the date, that was my accumulated depreciation at the end of the year, and at the same time, I then revalued the asset. So what has to happen is this 115,140 has to go to 0. So I simply deduct it. In a T account, it will go on the debit side, 115,140. That needs a double entry. The double entry has to go to the revaluation reserve. So over here, 115,140 gets added on there. Just to show you, both those figures will go on the credit side, 193,000, 115,140. Add them together, and I should come out with a figure to the value of 308,140, 308,140. That goes to the finance by section in the balance sheet. All right, 308,140. I hope that kind of makes sense. So I revalued the building by 193, that goes there. Once I've done that, I then have to do my depreciation expense, take off the land, make sure you're aware of that because land can't depreciate. It gives me 507, that's the rate of depreciation. That figure needs a double entry. Where does it go? It goes to the accumulated depreciation. And because the revaluation date was the 31st to the 12th, it then has to go to 0. Okay, so just to show you, in my minus fixed asset section of the balance sheet, that figure is going to be 0. Okay, and I'm now ready for working 6. So that's part 2. I'm gonna move on to part 3 now.